Hey, what's up? And welcome back. Today we're going to be talking about that's right, contrarian investments. And you might be thinking, what the heck is a contrarian investment? What am I talking about? What is this guy talking about? Has he lost his mind? Well, he's more tired than ever, so no doubt about it. But honestly, the words just keep flowing. Yes, I have considered getting into the rap game. There's no doubt about it. I think I'd be very successful. But contrarian investments here. We're talking about contrarian investments. These are going to be stocks and sectors that have been absolutely hammered as of late. So obviously everything's been pretty hurt, but more than that, we're talking about specific areas where sentiment's been pretty negative on, to where we can find potentially stocks that could rebound. So that's the goal, and I've invested in plenty of these before in my time, and I've shown certainly a couple examples of that. But these are stocks that have been absolutely hit hard, and these are then considered contrarian investments because people are selling out of it, and you buy it, and guess what? The thing goes up because people start buying back into it. So I've got 4 stocks for you today to potentially take a look at if you would like to. 3 of these are ones I've never actually talked about on this channel, so I hope you enjoyed that. Let's get into it. I will first say none of these stocks are going to be related to oil in any way. I know there's probably a lot of people interested in the field of oil right now, just due to how those stocks have been absolutely hit very hard. And, well, I think sentiment on oil is going to be negative for at least another 4-5 years out. I do think there will come a time when people realize the need for those fossil fuels for sure. There is no way to go 100% sustainable, and people will eventually realize that, and I think then sentiment will turn back to neutral or positive on the sector. I don't think oil or any oil company or gas company is really a good one to get into now, so that's why I didn't mention them here, even though those stocks are all down pretty significantly compared to the entire market. So when I mention these stocks here again, this isn't necessarily saying this price is going to bounce back up within the next couple days. I'm saying these investments are things that over the next year could potentially find a good rebound and potentially double in value. Some of these I could see double in value, but others just a good value play that you could just expect to get some solid gains in it in the end. And really, you never know how things are going to go with these. So these are just suggestions. We're going to start here with Carnival Cruise, Carnival Corporation. So why Carnival Cruise? Well, Carnival Cruise Lines here, ticker symbol CCL. You see, on a 5-day basis, let's just talk about since Wednesday, okay? So starting Thursday here, this stock is down over 16% in the past 2 days, which obviously you're thinking, holy cow, this guy's lost his mind. This thing's down 16% in 2 days, and he's thinking potentially invest in this? What are you talking about? Well, obviously we look a year out, and this thing is solidly down over 50%. And this has got it to the point where now in a 5-year basis, it's down 40%. So prior to that, this is a stock that, in 2019 here, was posting somewhere around 40% up in a 5-year basis. So it's not a bad stock by any means. And I mentioned this back in 2017. Again, this is I was wrong, and I'll admit I was wrong. So these leisure type stocks, Carnival Cruise, I suggested investing in these because, well, I had good reasoning behind it. There was a huge influx in cash in people's pocket with a new tax bill passed. So people were earning more. Wages have continued to increase regularly. And I foresaw that staying in the future. Unemployment's record lows, and I foresaw that continuing. So I thought these kind of companies would be good to invest in because they would obviously be seeing an increase in revenue as more people have more expendable cash, which means they'll be more likely to splurge for things like a cruise vacation or as opposed to just a normal, stay at a hotel vacation. So definitely why I got excited with Carnival Cruise, and I was wrong for sure, obviously, because I had invested back in 2017 range. I mean, this thing that was around its highs, and this thing could have been low. I didn't necessarily say Carnival Cruise, but I meant stocks like this. So, obviously, things getting hammered related to some We all know the alcoholic beverage related disease. Um, so what's going to happen as far as recovery? I think there's no denying that because of there's been a lot of cancellations, people are afraid to travel until we find actually this virus, if it finally gets under control, which I do think it will within the next month or two. I give it a month before we finally find something going on. We've had some very positive tests, but I give it a month before we find that, which means the next probably, I would say 2 quarters, you might see Carnival Cruise hurting. At least I give it a minimum estimate of 2 quarters for them. That's going to be hurting, and my perspective is I don't think there's that much downside left to this. I think anything around 25 for the stock is a strong buy. If we look at the numbers, I don't think the numbers lie about it. So posting a PE ratio right now of 7.3 with a forward PE of 8.7. So the numbers don't lie, but again, if you didn't know, Carnival Cruise Lines, pretty much, as I said, they are cruises. So obviously very luxury, high-end cruises. You just go out on a vacation here, Western Caribbean from Mobile, Alabama. 2 cruises from $189 average per person. It's a 4-day cruise. Fun stuff, right? You'd think so. Everyone's going to the Western Caribbean. I mean, why not? That's a good place to go, apparently. But who freaking knows? But that's, Carnival Cruise Lines. We also look at some numbers here. In terms of revenue, you do see an increase in revenue as, guess what? I told you would because, I'm the best analyst in the world. I'm kind of a better analyst than most of these professionals. Can I get a heck yeah? Because we know I analyze a lot better than professionals. There's no doubt about it. And this company has seen very much good increases in revenues because of it, because the economy is doing so well. But regardless, Carnival Cruise Lines for you, I think it's a decent contrarian investment because they're also paying a dividend that yields right now right over around 7% after the 2 days previous that it's dropped. So a very, very good dividend on Carnival Cruise Line in terms of yield right now. They pay it consistently. My concern is how that dividend looks in the future because obviously profits will be taking a good hit during these next 2 quarters, and I guess that'll affect the full year. So how does that, materialize to them? Will it actually, will they be able to cover the dividend because of that? Well, based off the balance sheet, I do think they certainly will cover the dividend. But regardless, I think there is that fear for people, and that's why investors are really selling out of this. But I do think this is a good contrarian investment, and you could see, positive returns here within a couple months for this. And obviously the market will be recovering anyways, but Carnival Cruise could be big because investors start to buy in and find some fair value for the stock. Next, we have MGM. MGM is a hotel company, obviously well known for very, very quality hotels. You see a lot with stuff like gambling. And again, this is one I called for. This is one that I specifically called for. I told some people close to me, this was before the channel even existed. I told people this could be a good investment due to the fact that, more expendable cash, more people are going to be gambling. It's just kind of how it goes. People are going to enjoy the life, spend more time in casinos. It's MGM, so quality stuff. You see a result in the stock price here. Past 5 days, this thing that's right, down nearly 17%, which you hate to see that. Year to date, down 39%. Yikers. You see on this 1 year chart, do you see this drop down? That's horrific. So on a 5-year basis, still positive, but just barely. So prior to this, on a 5-year basis, this thing was posting around 80% gains, which, again, when I said to buy in 2017 around here, it would have been a good investment because I could have been getting plenty of gains, but obviously I would have been down if I had held on to it this entire time, but I didn't buy in, even though I should have. It's one that I'm okay with. They pay a good dividend as well. Obviously, the yield's increasing as the stock price goes down pretty rapidly. But if you look at the valuation on this company, is trading at a P right now of 6 and a forward PE of 19. Forward PE isn't that juicy, and the reason why it's not that juicy as well, obviously their profit outlook is declining pretty rapidly because of, they've got MGM hotels or MGM resorts, I should say, in China that have had obviously bad occupancy, shutdowns, and right now people are at a point where they don't want to go to crowded places like casinos. They really don't, because people are hunkering down because of all of this nonsense the media is spewing. Absolutely ridiculous. But people don't want to, hunker down at a place with a bunch of people in a crowded area. So that's something people are desiring, and I think it'll be a little bit before they find that. But you see, from a market cap perspective, it's trading at a very cheap market cap compared to what it typically has. If you look at, obviously, the revenue numbers here, and guess who called it? I knew this revenue would be consistently increasing. Again, it's a booming economy, and I knew this. I knew this going into this, and that's why I suggested buying this stock. And based off a revenue perspective, I made a good pick. But not only that, but you see a good growth here in net income too. So I'm excited about that for this company. Could be a good contrarian investment, yielding around 3% right now. $20 stock, not too bad, but things been hammered this year, no doubt. Thirdly, we have a play into the retail perspective. So retail, obviously, sentiment's pretty negative on physical retail. Obviously, I don't think anyone denies that. People aren't really buying into retail stocks, as obviously Amazon's the king. Digital's taking over all of retail, which I believe is not necessarily the case. But what does Kohl's have to offer? Well, if you look over here in the past year, that's right. This stock is down freaking nearly 50%. But at one point, I bought this stock in 2017. It was up over 100% for me, and I was riding on highs. I thought I was a genius. And since those highs, it's fallen over 50%, nearly 60%. Yikes, you hate to see it. You really do. I thought I was riding on highs, and now I'm right around cost basis. But overall, this thing right now is yielding around 8% in terms of a dividend yield too. Pretty good payout ratio on it, so nothing crazy about that. So the dividend yield's very good, and they can cover the dividend no matter what happens to them. So one thing I want to say about physical retail, obviously, as we look at just Kohl's, what they're offering here for us, well, by department, you see they have men's, juniors, women's, plus size furniture. They have furniture as well, accessories, jewelry, sports gear, all this nonsense. Really all this stuff, bed and bath. They've got sheets and appliances. They just have pretty much a lot of stuff, but the majority of them is clothing. And the reason why I think this company will do well is clothing is not necessarily a type of business that can transition easily into .com. It doesn't necessarily easily transition online because a lot of people want to go into stores and actually try on shirts. And I don't blame them for it, because every shirt, if you've ever bought a shirt online, you already know a small in one brand is going to be not the same small in the other, so you don't know that unless you actually physically have access to that, but you don't. So you order it, you might have to return it, which I've never wanted to deal with because it's just a nightmare to do such a thing. Buying in-store typically can be safer in this aspect. That's my perspective in terms of the sustainability of Kohl's. I think they're a well-run business. As far as what they have to offer for me, let's look at a PE ratio right now. Trailing PE ratio of 8.6, forward PE of 8.14, which is historically obviously very low. Anything under 10 is very cheap. Price to sales of 0.3, price to book of 1. So the company's I think it deserves a lot more value. It's real cheap in terms of valuation than what it typically has been. Really cheap. If you look from a revenue perspective, it is a company growing revenue as well. But this is a really cheap company in terms of valuation. It absolutely is. And that's why I like it. So not only do you get a very good dividend play in this stock, I think it's a good value play that really this stock should be worth somewhere around the $70 range. In all fairness, if we want a fair PE on this, really should be sitting right around the $60 to $70 range. So let's hope to get there. I'm excited to see what might happen. So what else do we have? You know, sorry, obviously, work just bothering me, giving me texts on my phone, obviously some immediate work stuff, but we're going to get into another area that's been absolutely devastated by, that's right, yours truly, the virus of the alcoholic beverage variety, Delta Airlines. Ticker symbol DAL. So obviously the ticker symbol also reminiscent of the world's worst professional football team, the Dallas Cowboys. Sorry, we hate you. I mean, you guys suck. You have the best, one of the most talented rosters in the NFL, but you suck. You can't even make the playoffs. Regardless, Delta Airlines, if you look at the history of this stock, 1 year out, right now sitting right around 7% down for a year out. Again, a time in which the market went up 20%, but over the past week or month and really half a month, this thing's down 22% nearly. So big downward movement for this stock. Right now, a very good dividend yield of a little bit or around 3.5%. Good dividend yield on this stock, no doubt, which I like. And again, all these companies did pay dividends, which means if they're paying dividend, typically they're a good company. They can balance their balance sheet, if I can say that right. Does that make any sense? They can keep track of their finances and expenses, and I really like that about these type of companies. But Delta Airlines down quite a bit. Really, the whole area of airlines are just really hammered ever since Boeing. Obviously, their nightmare with the Boeing 737 MAX, as well as just the virus spread. People don't necessarily want to get on planes and travel as much right now. People are canceling flights. Some goobers are being goobers, but they can be goobers all they want. You know what a goober is. Don't act like you don't. But obviously, Delta Airlines, a plane, it's in the name, airlines. So obviously they offer different deals. You have your American Express Sky Miles card for Delta, so you get miles for every mile you fly on a plane. You get points and fun stuff, and you can attribute that to future purchases of tickets, stuff like that. But well-run company. If you look right here, a trailing EPS of 6.3 and a forward EPS of 6.2. Very cheap valuation on the company. Price to sales of 0.64. So the valuation is cheap. Price to expected growth of 0.7. The valuation is cheap on this company, no doubt about it. Sentiment's just rough on airlines right now thanks to Boeing. So I think there's value here if you look from a valuation standpoint. This thing could certainly react pretty positively. I do think you're going to see a negative impact in terms of revenue and profit here in the upcoming 2 quarters. As with most of these stocks, Kohl's is the only one I think that might not actually see that big of a decrease. But you see, Delta is growing revenue pretty rapidly, and it's very good. Very good revenue growth, and you see gross profit also sitting around the same point as well. Net income, very good net income line on this company. I really like what they're doing, and I think they're doing a great job. So that's why I think Delta Airlines is a decent pickup. So these are contrarian investments. Let me know if you want more videos like this, but these are just some ideas of stocks you might be able to buy.